Here are 3 reasons why options trading is just better than just trading stocks. Hi, my name is Bo Crable, the founder at Option Scout, where we build software for options traders. So if you're looking to find trade opportunities or just visualize your profits, we have some amazing software there. But in this video, I want to talk about 3 reasons why understanding options and using them responsibly for your trading strategies is actually better than just buying and selling stocks. And I want to segue in right into the very first reason about flexibility. So I just brought on a finance guy to Option Scout, and we were talking, and he's like pretty big in the stock space. He's been a trader for a long time. He's not too big in options, but he says when he does do options, what he loves to do is if he wants to sell his stock, instead of just selling the stock, he will sell some calls onto it. And here's what happens. Let's say you have a stock at $100. Okay, and you want to go sell that stock because you're at a profit and I'm ready to get out of it. Well, you have a couple choices. If you're just a stock trader, you could just go sell it. If you want to amplify it maybe with options, you could sell a covered call, and you could choose 100 strike. So meaning you're going to sell it at 100 as long as it stays there. But in return, you collect some extra income. So, my guy that I just brought on, he likes doing that because now he's, making some extra income from it. And the reverse, another story he tells that, when the market's down or just when he wants to buy into the market, you could see this as dollar cost averaging. The dollar cost averaging is a very popular thing amongst, many stock, investors. Well, another way you can do that and actually get paid and create extra income is through cash secured puts. So let's say you want to get into the market, you want to buy some stock, you could buy the stock, or you could sell a cash secured put and collect some extra income. And you can actually do it really, really far in the money, where you're gonna get exercise pretty much no matter what. Well, unless things go really, really high, and you'll still actually get some extra income. So that creates a flexibility where you have more than just one choice. You don't just have to buy, sell, sell, buy. Like you can, do a cash secured put where you're buying and getting income, or when you're selling, you get some extra income as well. The next thing why options trading is something that almost every trader should understand, especially if you're somewhat active with this, is about protection. So if you are someone who, you're a long-term investor, but you're really, really concerned over the short term. Now, selling your stocks, I've seen a lot of people that would just like rage quit and just sell all their stocks and things like that because they have so much fear going on. That could have a lot of implications. One, you're having to worry about it. Two, what if the market goes back up? Or, another thing, you might have to pay taxes, right, if you're at capital gains. What you could actually do instead is you could buy insurance. So this goes through like a married put, where essentially what this means is you have a portfolio or you have some stocks. So let's say you have a bunch of Google stock and you're really, really worried about the short term. Well, you can buy a put and your losses become dramatically limited. So let's just make easy numbers. Let's say Google is trading at 200. Your cost into it is 100 because you bought a long time ago, and you go buy a put at 199. Well, if Google starts going down, you actually might even make some extra money than you would have, but your losses are capped. Now, this is not free because, if the stock goes up in value, you're actually not making as much because you're having to pay a premium for that. So, Google, right, if it's trading at 200 and if it's 199 strike or 200 strike, you're probably paying a few $100, maybe even $500, $600 for that to protect your downside risk. So that's really awesome in that situation. And that goes into, again, that's better than just buying, selling stocks. Because if you just sell, well, now you have the opportunity cost of it going back up in value. If you buy a put, there's no big deal. If it goes up, then you still made money. Also tax implications, things like that. So yeah. Okay, the last reason why it's super important is about enhancing, and why this is better than trading stocks. And this is really important for, let's say, the day traders out there. If you're a day trader, there's a lot of things you're going to look at. You're going to look at implied volatility. You're going to look at, what's the volatility going on in the market. You're going to look to see if a stock is oversold or not. You're going to see like the moving average. And really what you're trying to do, you're trying to time that stock and trying to get in and out of trades. Well, if you're good at that, and if you believe you are, then you should look into options, because that can enhance it. If you know that volatility is really, really low right now and it could spike up at any moment, well, you could buy any type of options and it would probably go up in value if you're right, if the implied volatility goes high. Or another thing, if you're really certain that implied volatility is going to go down quite a bit, well, then you can sell pretty much any option and you'll probably make some money. Depending on a few things. Or if you're really certain that the stock is going to go up a little bit, well, you could enhance your gains because, options can be leveraged. So this kind of fits any type of investor. If you're a passive, income investor, this can be better for you dollar cost averaging. You can sell cash secured puts. Or if you're a long-term investor as well, something that I didn't talk about, in the first example I gave where you can collect extra income by selling covered calls, you could just, not actually sell the stock and sell it at a really, really high out of the money where you collect some extra income. So even if you're a long-term investor, there's reasons for that you want to do this. A lot of dividend investors love dividends because they can collect extra income, but you can do that with your stocks and actually get a way higher return. You can have a portfolio of stocks, and instead of getting a 2-3% dividend yield a year, you could get 10% in premium on just like one trade. Now, depending off the stock and things like that, and again, this is not financial advice, but any type of trader, if you're a dividend investor, passive income investor, day trader, you read a lot of technical analysis, if you're a swing trader, if you dollar cost average, options have some type of suitable, reason, strategy for you. So that's why options are just better than stocks. And it's not that it's better, it's to enhance it, it's to improve, it's to give you the flexibility, it's to give you the protection. So if you're big into stocks, you should also understand options. That's why a lot of hedge funds are called hedge funds, because they use options to hedge. So, it definitely makes sense for you to understand. Actually, there's a lot of financial exams that you have to pass, and throughout those financial exams, you have to understand options and the derivatives and things like that. So anyhow, I hope you like this video. Make sure to subscribe and like this video if you want to get more information just like this. And check out optionscout.com where you can utilize some free options trading software as well.